Investors and traders, welcome to the channel Market Chat Pattern. Today is 18th of January 2025. Hope everyone is having a great weekend. We will take a look at the key US technology stocks and ETFs in this video. It will be a little bit shorter video than usual, so I'll try to cover as many stocks as possible. As always, this video is for educational purposes only. It is not a financial advice. So let's take a quick look at the Nasdaq 100 cash index. We have seen the market actually move lower as of December of last year, and what it has done is it has done a number of these ABCDs right into this 38.2% retracement on 13th of January, and we have seen a rally. Now the rally has been equal to thus far what the previous rallies have been. Here we go. So there is this symmetry here. The market is right also at the 61.8% retracement. So in order to be more bullish on this, and then to conclude that we might have actually put in some sort of a good bottom, I think it needs to get above this 61.8% retracement on closing basis, and ideally I would like to see two closing daily closes for this. And then the other way to actually look at this is that this seems to be a descending channel formation, like this. You can draw it pretty much like this, is a parallel channel like this. And this formation could also be actually viewed as a bear flag, which might still be in progress, and we could still see the market actually move back and test lower part of this trading range as well. That possibility exists. Now if we go and take a look at this on QQQ, here we go, we have something very similar. So these ABCDs have shown them one in the red, and then we have the blue one as well. They are completing right where they should be, and right at the 38.2% retracement, going back to the August 5th of 6th of September for the ETF. And you can see it's this flag formation here as well, and this one is, I believe, also the 61.8% retracement. There we go, right to the tick for the QQQ XLK. Slightly different pattern formation. Here you go. I've not drawn the ABCDs here, but I can see there is some extended ABCDs, right? But the important thing is that it also went to the 38.2% retracement of the 6th of September one. Now the S&P 500, it has a little bit different pattern formation, which I'll try to cover in tomorrow's video. But the key thing to note is that the NDX cash index and the QQQ, they are actually found support from a 38.2% retracement, multiple nested ABCDs, and we're closing right at the 61.8% retracement of the rally. So at really critical levels, and getting above those levels on closing basis is going to be positive for the indices. Now let's take a look at some of the key technology individual stocks. I will start by taking a look at Meta. Meta has actually it's been range bound, but it's one of the better stocks in my view because of the focus on artificial intelligence, and I believe we are in this purple ABCD formation. The price did challenge it right to the 61.8% retracement. The momentum, the price closed above 20-day moving average, which is above 89-day moving average, which is the green one, so it looks rather good. So the key thing is that this top of the range, it needs to get above this 637, and then we have 650, 670 as the targets for it. Getting below this 61.8% retracement, that begins to change the scenario a little bit, because this is the structure I'm watching. It means that we might be actually in A, B, C, D to the downside, and we could see even a 570 in that case, which will be 78.6% retracement. It remains a range bound market for now, but I believe this 585 was a key level because it was retested, and then the price rejected lower prices, and then kind of retested again on 14th of January and then moved higher. A bit frustrating price action. We have had this kind of price action here as well. Then we had a nice swing. So certainly it is a bit two ways at the moment. We have got bulls and the bears, and they are kind of juggling and a tug of war between both of them. But I do think we could see higher prices here. We'll have to wait and see. And on the weekly chart, this is I believe we are in this channel formation right here, and we could even hit this 670 on the weekly chart, possibly even 690. So we'll have to wait and see. So this is what we are looking at in Meta stock, and let's take a look at Apple. So Apple is one of those stocks which has not performed well. It reached our targets, pretty much came very close to the upper end of it, which is 262. The high has been 260.10, and you can see for it's just pulling back for 3 weeks now. But this is the pullback that we had seen, in largest pullback we have seen in this leg. So it could still pull back a little bit further, maybe come to 220. That's the 61.8% retracement. Getting below that, or getting below this swing point right here. There we go. Here we go. Then it begins to maybe we'll have to reassess a few things. So this is what we are looking at in Apple. Apple stock. I'm gonna move this here. Well, I will leave it here because there's another ABCD here. Okay, now let's take a look at Microsoft. Okay, so you can see Microsoft also remains range bound. We have this ABCD, not exact to the tick, but it came right to the 78.6% retracement. The market has been moving lower, remains range bound essentially. The chances are it might actually be in this ABCD structure, the red one. We could see still lower prices to about $370 per share level on the Microsoft. For it to make higher highs and new all-time highs, it really needs to get above $455 per share level. I think we are likely to see more of a range-bound market for Microsoft for maybe a little bit further time. But yeah, I mean, this is the kind of structure that we are watching for Microsoft. Then let's take a look at Amazon. So there you go. Amazon is also range bound, but it also completed this extended ABCD. Well, not to the tick, but it came pretty close to it. It's just a range bound. So I think the chances are it remains more of a range bound affair. And then we do have some higher targets as well, to about $250. There is a chance if there is a larger pullback, the pullback could be about this much. But if the coming next week the market remains strong, then the CD leg could actually be extending, and we have higher targets as well. So we'll just keep on watching this place really carefully, whether we get a further pullback, maybe to the $200 level, which is about the 200-week moving average, or it just sort of becomes stronger, and we begin to see higher prices for this one. And then if we take a look at the Shopify, so you can see that Shopify is basically after hitting this pattern formation, it's just pulled back. Maybe I think there is a possibility it could pull back a little bit further. So let's take a look at this. Here you go. Here we go. So maybe $93, that is possible. That's going to be the 38.2% retracement, and also we have the 20-week moving averages around that area. Now let's take a look at Netflix. Okay, so there we go. Netflix has been pulling back a little bit. Maybe it can pull back a little bit further, We do have a higher target of a little over $1,000, which there is a possibility the stock could actually do. Let me actually remove this. And what we have seen here is basically the market. Yeah, I think there's a chance we might have actually be right on a key support level. Let me actually draw this. It's not quite the 38.2% retracement, even from this level. So yeah, I think just because of the symmetry in this, and we have this bigger pullback as well that took place. So I will be watching these levels, maybe a little bit lower to around $800 per share level as well. Let's see if we get a 38.2% retracement. Very close to it, so there is a possibility it could move a little bit lower, and then we'll see whether that support will hold or not. Okay, now what's the other stock that we normally draw? nvidia. Nvidia, here we go. So nvidia, this stock is it seems to be putting in a double top formation, um, because the 154 was our target, has reached. That is possibility of 171. That might be the kind of upside, but it's range bound on the weekly, and there is a chance maybe there is a further pullback that could happen. Let's take a look at this on the daily chart. Here we go. So on the daily chart you can see that this was not a very nice price action on the 7th of January. A big pullback taking place here. So yeah, it's kind of messy price action here, and yeah, so looks like more of a trading range to lower, by the looks of it, in nvidia. So I think one nvidia is something, um, these are the levels that we were watching, and now we just kind of watch the price action. Okay, now let's take a look at AMD. It's also in the devices. So AMD, you can see that I've done a whole video on this one, so you please watch that if you're interested on this stock alone. You'll find it in the archives. Okay, and here what we are looking at is basically a stock which has moved quite a bit lower and also broke this trend line, and is just finding some support from the 200-week moving average. Now if we move to the daily chart, this is where I had a number of these coming together, these ABCDs. You can see that, and we were watching that there's a possibility it could move into this box and maybe even lower end of it, like 107. So we'll just keep on watching it. It's a pretty weak stock, so one should wait for a point of strength to come in this if they're looking for a long side. So that requires a lot of patience, because look, the price action has been pretty bearish, but it's moving in these ABCDs, which are could be pretty good support levels. So we'll just keep on watching this. And then if I show this on this monthly chart, you can see that this BC swing, it has done exactly the same here. So we have reason to believe we are in some sort of a support level. Breaking this support is gonna be very bearish for the stock. So we are in that ballpark figure, but one has to be a little bit more patient, and wait for some strength to come into this stock. This is what we are looking at here. Then a quick look at the Z scalar. So here is the Z scalar. You can see it's just range bound, massive range bound action. And on the on the weekly chart, sorry, let's take a look on the weekly chart. There you go. So yeah, not great looking price action, really range bound. Now let's take a look at the roblox. Here we go. So the Roblox is, really pleased to see that Roblox is moving to that $60. Actually, the high has been 66. So it's reached our target. Our target was about 63 to 65. So we had to wait a really long time, but good to see that Roblox finally reached the 38.2% retracement. Now, if it is strong enough and it's able to get above this, that's going to be a really, really bullish sign. The other way we can think about this is that if it is able to put in a structure like this, so it does something like this, and then it makes a retracement, and then we get a rally. Boom. That's gonna be a very, very bullish kind of a structure. Taking out these highs, so that's gonna be the setup that we'll keep on watching. But good to see that it's come out of this really long period of accumulation, which went on for a few years, couple of years actually, and then finally it's breaking out and reaching our first target. So there we go. This is why we like to keep track of these stocks that we follow for this segment. So thank you very much for watching the video. If you happen to like our video, then please give it a thumbs up. And if you like our technical analysis, how we look at these markets using Fibonacci retracements and pattern recognition, then please do subscribe to the channel. And if you do, then hit that bell icon button. That way you will know when the new videos are posted. So thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.